my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, how we doing? Welcome back. Happy Tuesday. Just got a couple trades running right now. I'm looking at some profit on a little SPX action up around 30 and 40 cents respectively. So I'm going to try to go, let's see, we're kind of falling off a little bit. So 30 cents. Let me see if I get out of here for maybe 25 cents. Which one is, so the call fly is trading. Let me see if I get out of here for like 25. Now let it marinate a little bit longer. I want to see some more profit on the call fly. So this one's break even. This one's up. I guess I'll just leave it alone. I was looking for the call fly to pay a little bit more. So price is kind of right in the middle of my zones. I have a broken wing butterfly up here, broken wing butterfly down here, and price is in the middle. So it's in a good spot. I'm just trying to get profit on both sides. It actually looks like this morning. And the reality is I'm in the middle. So, I mean, there's still some time that I need to sit in the trade if I want to go towards the max credit. And then obviously I've got my profit traps on either side. So by the end of the day, potentially have that little profit trap. That's the hard part though, is like waiting all the way to the end of the day and seeing if we're going to stay, basically between 61.56 and 61.64. There's about a $9 window there and a 62.11 to a 61.19. That's kind of my profit trap by the end of the day. If we're in between there, fine. Like I said, if we're kind of in between these levels, this should be really good. So right now it's looking better. Like call fly showing a bit more profit and put fly showing a little bit more profit. I'm just going to kind of let these marinate. Collectively, if I can get about 70 or 80 bucks on the morning, I'll take the trade and be happy with that. Okay, anyway, I'll monitor those. I'm just going to spot check that on my other chart. Let's see if we have any major levels this morning. I see a big sticky level around 62.20 today and around 62.25. So SPX gamma levels, liquidity levels between 6,200, 6,225. Hopefully, I mean, I'd love to see it just really sticky around 6,200. Okay, so we'll come back to that one. Let's go top down. Apple had a little surge yesterday. I was interested, like Apple's up and there's like a big antitrust lawsuit that's getting thrown out. Also saw that the market seems to be focused on like Apple throwing in like, they had something on like Anthropic AI yesterday. I don't see where this it was yesterday. More events. Out of favor, Apple holds key to tech. I mean, I agree. I mean, I think Mag 7 is your key to like this market holding up. I could have swore I saw something on Apple Anthropic yesterday. Anyway, all right, never mind. Let's go top down. So we are sitting just slightly lower. The market gapped a little bit lower. We're still red on the day, 0.15 in the SPX. Qs are down about 0.4. Okay, so Qs are selling off a little bit. SPX is hanging in there a little bit better, but maybe turning slightly. We have not had. I mean, look at the last few weeks of trading here. This is SPX. Let me go to a slightly but bigger time frame. We've had a lot of up days here after some chop. So this was, Musk and Trump. This was Israel, Iran. This was a ceasefire. So these monster gaps we've seen in the market have been just thrusting the market higher. If I'm not mistaken, is this your U.S.-China trade agreement gap? I'm pretty sure it is. So U.S.-China trade agreement gap is like not agreement, just rather like the 90-day pause. So there's the pause of U.S.-China. Market rips up, pulls back, and retests. Higher, higher, higher. Stalling on Trump and Musk, stalling on Israel, Iran, ceasefire, ripping up, and just there's your thrust. So here we are, poking all-time highs again. I was a little shocked going into the end of the month, end of quarter, that the market did. Give me 1 second. That the market did have a run. that the market ran up into the end of the month, end of the quarter. I thought with a major kind of quadruple witching OPEX cycle, like you've got index options, futures options, stock options, and VIX options, like all four were expiring towards the end of the month. And that was on I guess that was the 20th of June. And then yesterday was end of month, end of quarter. But nevertheless, we're at all-time highs. I did kind of an interesting trade yesterday. If you're interested, it's in the Pulver alerts. I did a call condor, and that's just a fancy way of saying I'm actually selling the market a little bit. It's defined risk. It's up here. So I looked out because it is officially the first day of the new quarter. I looked out to around the 10-20 delta area, and this is roughly what a resistance level should be in the market. Something should be like around 6550 to 6600, somewhere within about 50 to 100 points. This is going to be, and I'll try to verify it on some of the big gamma levels that I can find, but this should be roughly where the kind of quarterly resistance is. And then the support level is going to be down here around 5750. So if you want to write these levels down, it's about 6600 to about 5700. That's kind of roughly this like big quarterly ceiling and quarterly floor. All right. I don't know, if the market's just like, it doesn't care at all and just melts up because Trump is trying to get Powell to cut rates more aggressively. Look, the Fed's already cutting 3 times. We're cutting into inflation that really hasn't made a huge improvement. It's a little bit better, but yields are still sticky, and this is the biggest question mark I have going into the later part of this year. If we go U.S. 10-year yield, okay, we're still not below Liberation Day lows. When remember in the U.S. government, like when Trump and Bessent were celebrating, hey, the 10 years below 4%, as the market is tanking. Okay, we're not down below Liberation Day levels. So I don't know if the Fed cutting 3 times this year, which is probably going to equate to about 75 basis points. I don't know if the bond market is going to price that in as a good thing. We don't know that yet. Okay. All right. Let me check one thing. So up 40, up 20. Just going to look at maybe modifying these. So if I go 30 and 30, let me see if I can get here. So I'm going to go 30 cents. And 25 cents and see if these will fill. Okay, I'm going to modify these just a little bit. Give me a sec. So that would be 30 and 45. That'd be $75 on the day, which isn't bad. I'd take that and eliminate some of the risk. So I'm going to make these adjustments. Update. Give me a sec. That's the call side. Plus, what is that? 50 and plus 30. Okay, sorry. So the 10-year yield's watching closely. The Fed, let's go to inflation here on, I had my edge finder. I'll bookmark this in just a sec. All right. Just want to go into our inflation numbers because they have been reading a little bit warmer. We have non-farm numbers as well. So this is what's coming this week on Thursday. 25 cents just got filled. Okay, good. Okay, I'm just gonna let that marinate. Let me try one other. I'm gonna see if I can get another put fly in. July 1st, put fly, 85. Try to get another 70 cents here if I can. Okay, just gonna move a couple things around. This one is ungrouped. Okay, so I still have this one running. Going after this one. See how it plays out. Okay, just a couple tweaks on the fly. All right, inflation data. We have CPI, PPI coming out next week. So let's go year over year. And I'd like to go back a little bit farther if I can. Let's go back to like 5 years. There we go. So here's the whole inflation story. 9+% peak all the way down to 3%. Sticky, 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 sticky. A little bit of trend to the downside, but that trend has stalled. Passing a $2.4 trillion tax bill, forcing the Fed or asking the Fed, begging the Fed, handwritten letter, trolling the Fed to cut rates faster. All that's going to do is just run the economy hot. I don't think this is good, but again, what I think and what the market do are maybe two different things. My point is this whole inflation target at 2%, we're not close to it. If the Fed was going to be cutting rates, it's like you'd want to see inflation targets down below. We want to be sub 2% in order for the Fed to be like, yeah, we can cut rates now. But anyway, we're just truly between this 2 and 3% level. That's where we've been since 2023. So is that really where the market is just we're just acknowledging that we're never going to get to 2% inflation. Inflation this last week with core PCE was a little bit hotter, and yet the Fed's going to say, hey, we're going to cut rates 3 times. And maybe they do. Maybe they do. So here's the watch tool. The big change we saw from last week is now we're looking at a September, October, and December rate cut. That was the biggest change. So July is still expected to be a pause. We still have inflation data coming out in July. So it's July 1. We have inflation data next week. We'll see if it's hotter. We'll see what the CPI year over year is. We'll see what headline is. We'll see what core is. But the pause is still likely going to be the same. 80% chance there's a pause. Cut September. Cut October. Cut December. Is that because Powell is bowing to Trump? No. I think because the Fed is somehow in agreement that inflation is improving. I also think the Fed is doing it because they do see a softening labor market. I think the trade war has pivoted hard, but I think this tax bill is maybe the next big thing where it's like we don't know what inflation is going to be. $2.4 trillion is not nothing. Like it's crazy that it would just add more to the deficit. I think gold is still a good play. Bitcoin is still a good play. The dollar has been probably one of the easier sell trades in 2025 as we are still making some lows. I had a lot of questions yesterday in one of my afternoon sessions. What do we do on the dollar? I can't justify selling the dollar at these lows. This is a symmetry level. Just be careful of this. There's a symmetry level right here that I do think the dollar at least catches a bit of a bid on. So if you're, long euro dollar, that's been a good trade. If you're long pound dollar, it's been a good trade. If you're long Aussie dollar, New Zealand dollar, it's been a good trade. If you've been short dollar CAD, it's been a good trade. Point is, if you've got profits, move some stop losses, right? Move some stop losses. Why? Because I think at this high, low, lower high, lower low, I could see this dollar at least catching a bit of a bid. It may not be this big, crazy move to the upside, but even if we get a move back into, let's say, 100, or even like past support here, around this like 101. This level's around 102. So I'd say between like 100 and 102, the dollar could potentially have that squeeze trade. Okay. So just, I mean, maybe it doesn't. Maybe this is just a slow death to the downside, and the dollar is truly just going to be a move all the way to 90. Um, but I still think there's waves. So if this is one, all this is wave two, the market set up to then fall. You got symmetry, and then we get another pullback for another fall. I mean, this does line up to be a good medium-term trade. If we get another chance to sell higher, I like the dollar selling. I like the dollar selling for another wave. Okay. But that pullback to me just it's either a pullback into here around, like I said, like 100, 101, or 102. I'm looking to sell and fade that dollar. Okay. All right. Gold. Gold is up today. I still think gold is limited to the upside. Gold can certainly run a lot hotter if the dollar gets weaker. Gold can run. I think technically something is possibly going to have a bit of a consolidation or a pullback to at least tap these levels. I've now been on this kick for a while, but um, the pullback, the 144 moving average, the 200 moving average, it's a long bar count. It's 400 plus bars all the way since this would be daily charts. We're going all the way back to October of 2023 is the last time that we hit the 200 moving average, and we're now sitting around 442 bars. 442 bars. Okay. It doesn't mean that it has to come right back to it. But I just think that the upside until we consolidate more. Okay, until we consolidate more, maybe give us a chance to buy at like 3,100. Maybe if we're lucky, a stab at like 3,000, and that becomes like the next big floor. But from a 3,100 to 33,000 level, I'm going after new highs again. So I think that gold right now is likely not going to break higher and go substantially higher without having more consolidation. So I'm still patient. I'm still waiting. If I want to add to gold futures, if I want to add to any of my gold positions, it is going to be at like a 3,100 to 3,000 correction. And I'll just be really patient. I think we get there. I don't know if we have to have a bit of a, and it's interesting because like risk off tone in the markets might actually be good for gold. But I think it's that potential pull in the dollar. If the dollar rips up to like 100, 101, 102, I think the gold side, maybe falls a little bit. But all that is a chance to kind of get the dollar less crowded, free up that side a little bit, so the real sellers come back in and flush it down at a better price. Gold offers a pullback that hopefully the whole world wants to buy, and this maintains a pretty strong bid around like the 3,000 handle. Silver, I still like silver quite a bit. We're consolidating around this like $35, $36 handle. I mean, I've been talking about the all-time highs on silver. Something could be really fun about silver, which would be if we clear $40, if we get like better than $40 on silver, I think 40 to 48 to 50 could be very fast. I think if we clear 40 or clear this 41 target, then we could go from 41 to 50 very quickly. I am hopeful that like that's the play. And if we start to really blast off through in the 50s, then I'm trailing stop losses because we're going into some uncharted territory with all-time highs. But I'm still after this silver trade with about 30 to 40% more upside, and that does get me pretty excited about a metals play that could do pretty well. I mean, that's 31% to get to all-time highs. If we blast off through that, any excess would be kind of the gravy train on silver. But I still like it. Bitcoin is kind of your new hedge against fiat. It didn't take long for Bitcoin to get the type of mainstream adoption where, IBIT, for example, like the BlackRock ETF, has as much inflows or market cap as what gold took like 8 years to get. So it's not nothing. We're still hanging out at 106. You know, the markets are obviously like at all-time highs. S&P and Nasdaq all-time highs. Dow is not. Russell is not. But Bitcoin is sitting near all-time highs. I do wonder like what this is going to look like. Is this just more consolidation that's just very brief before we get a thrust higher? What happens when the tax bill passes? Does that help, you know, surge Bitcoin higher? What happens when the Fed starts cutting rates? We start printing more money. We've got money supply at all-time highs again. Does this help Bitcoin go higher? Maybe. I'm still long Bitcoin. It's not a difficult trade. It's just I'm long Bitcoin. Measured moves. I've got Bitcoin measured to about 130 this year. If we hit some fib levels, 140, 150, there doesn't have to be necessarily like a profit target. I think that it's just if you're getting some gains in appreciation, you look at it like a dial up, dial down your percentage allocation. You know, if I've got 5% allocated to Bitcoin and all of a sudden it's showing 8, 9, 10% of my portfolio, then I can take that profit. I can reallocate it where it's I just dial it back down to 5%, or I try to maintain like a steady allocation percentage. But I do like my combination of SPY, Qs, gold, silver, Bitcoin. 5 ETFs you can trade that I think provide a pretty good basket. Obviously, trading some options to protect the downside. But I think that's 5 simple ways to approach the market, have some good upside. Okay. All right. MicroStrategy at 385. I still have a January call. Look at this. If Bitcoin makes new highs, this should be back up into the 400s. I have a bull call spread that can pay about $1,100. I've got 15 of them. So that could be pretty good. That could be like 15K on just some income. I did have some calls. I do have, let's see, I did this to do yesterday. I rolled some calls on Intel. Or no, I'm sorry. I gotta do that. July 3rd is my expiration on Intel. So I'll roll out some Intel. I rolled some Snap. I rolled some JD. I'm going to wait on Pfizer because the premiums are just crap. I do have to add some a leg to my diagonal spread on TLT. I did roll IWM out to August. So if anybody's in my campaign trade on IWM, let me find it here in Pulver Report. So let's go IWM campaign trade. So I'm going to update this. Oops. SPY campaign. There we go. So it was updated on May 8th. I've got the hedge on there. Let me update this one. So jump to that trade and add. Okay, so I'm going to update this one. So this is going to be a reply to my campaign trade. So IWM campaign trade update. So one bought shares, added 516, covered call. Let me get an add on here. So IWM. Okay. So I did a 516 added, or I should say rolled to a 530 covered call, and then rolled to a 6.6 covered call, rolled to a 6.9 covered call, rolled to a 6.30 covered call, and rolled to now an 8.1 covered call. So the break-even price is 192.44 with the sell call. It's a 201 strike. So right now on Russell, I've paid for my entire hedge, by the way. So I'm hedged to the downside on Russell. I've paid for the entire hedge with another $300 to $400 of profit, and I'm still going to keep rolling the Russell. So I went from I bought the shares at 199.85. I've rolled enough on these covered calls that now my price is down to 192.44. So I've saved $7.41. My hedge trade only cost me $500. So I've got some income regardless. It's a free hedge all the way to the downside. That's probably worth like 20 to 1 or 16 to 1 or something ridiculous like that. And also I'm going to keep adding some calls. Okay. So I'm going to keep doing this. Let's see, 192 with the break even 192 with a free hedge on RTY, which is my Russell futures trade. I will continue to roll IWM for income. Okay, so that trade's been updated, right? So from initially buying the IWM at roughly 200 bucks, we're trading at 215. Granted, like I've given up some upside, okay, but with a hedge to the downside and income, I'm still looking at about $300 profit guaranteed. And if I keep rolling, if I roll it out another week or two, then there's $400 of income. I roll it out again, $500 of income. Roll it out again, $600 of income. Roll it out again. So, I mean, this stock price is most likely not just going to rip all the way to 244. Okay, if it does, then I'm obviously going to be way behind here, but I'll keep rolling it. That's the nice thing is I can keep rolling it, right? So long story short, I'm going to keep this. That's why I call it a campaign trade because it's something I'm going to continue to work with. Okay, all right. So that's Russell. The VIX is down to 1702 today. Spot checking a couple of levels. We do have some support around 6175, 6170. Let's see if it kind of stays choppy right in this like 6195 to 6200 zone. Still watching a couple of butterfly spreads on my end. Price today. Let's watch this one. Let's set this one to 6175. There we go. So these are the two levels that I'm watching today. Call side should be looking a little bit better for profit. Okay, I'm going to take this one down to 15 cents debit. That should be filling at 15 cents. Okay, so quick update here. That would be so 45. Oops, one sec. Okay, not bad. Okay, so taking some profit there. All right, IWM, just going to keep campaigning this thing. Same thing on Tesla. I'm going to roll some calls on Tesla. The expiration is Thursday. I'm just going to try to pull out as much of it as I can. So Tesla's down like 5+% today. Big gap on Tesla. I'm not sure what the news is. Criticism of its reliance on U.S. subsidies. Funny. Fine. And then all of a sudden, it's like this news is going to change. It's like as soon as Tesla has humanoids in their factories, like this stock is going to be very different. So I don't know. It's just volatile. It's love to be hated. I still think it's way more than an automaker. So I think when it comes to what they're doing in the AI space, in the energy space, in the yeah, I mean, it's just more than automaker. So granted, it's trading really expensively, like price to book, price to earnings, but so is Amazon forever. It's like I think Tesla's one of those stocks where the nice thing is I just keep selling calls on it. It sounds stupid, but I keep selling calls. My break even on Tesla is down to like 220 right now. So I've got another expiration on the third, which is Thursday. So I keep selling some calls. Okay. Yep. I keep hearing about Robinhood. Everything's all Robinhood. Everyone loves Robinhood. Yeah, I've got a trade on. My trade on Robinhood is a ratio spread. So Robinhood is a ratio spread. It's already up about 41.5% of max credit. I pulled in $1. I did way out of the money ratio spreads because I said, look, I'm willing to own Robinhood. I know they've been getting a lot of love lately. This stock has been just a high flyer since that pullback in April. From $36 up. I mean, that's crazy, right? One stock is up 180%. Feels great. Just, I wasn't going all eggs in Robinhood. Good for them. It's still ridiculously overbought with a lot of diversions at the top. You can see this. So that's my little indicator there. So I expect a pullback. I'm not going to short it, but it wouldn't be surprising if we have a bit of a pullback. So let's find out. I put in a bear call spread in AVGO. Right now, that's looking a little bit better. And I put in a bear call spread on the Qs, which right now is just upside down a few. My break even is 542. AVGO, my break even is should be around 266 and change. Let me check on that one real quick. So AVGO is down about $2, so almost break even there. I've got a profit target set on this one. I'm just going to put in a bear call spread. So pulled in $1.30. I'm going to try to close this thing down for 30 cents, hopefully. So try to grab $100 out of that one. Qs, bear call spread down about $20. I'll keep a close eye on this one. This is out to July. So if we have a bit of a downturn, this one in for 59 cents. Let me see if I can close it down for, let's go close it profit target 50%. Yeah, to 29. Try to get a 50% winner on that. Ag's asking about the ratio spread. Yep, I'll talk about that. Do you give me a stock that you care to own? It's an easier way to explain it if it's a stock you want to own. That's the way I look at every ratio spread. I'm willing to own the shares. That way I take the trade. If you're not willing to own the shares, it's okay. You just have to manage the put side. So give me, it's 10:54. Give me 6 minutes. Let's have a little session on ratio spreads at the top of the hour. Okay, I want to get through a little bit more top down here. Let's take a look at currency strength. So Fed watch tool, like I said, expecting to cut 3 times this year. Inflation, we'll have more CPI data coming out next week. It should be next week. I'm not going to have a forecast for it, but we go to this week, we're squeezing in non-farm payroll, unemployment rate, and initial jobless claims, which I think is probably pretty important to watch. And then next week, we should have another round of CPI data. Let's see here. Tuesday, nothing. Wednesday, nothing. Thursday, so we don't have it next week. What the fudge? There it is. So the 15th and 16th. So we're 2 weeks away. 15th and 16th, Tuesday and Wednesday for CPI data and PPI data. The Fed is not until the 30th of July. So that's our next round of inflation on whether or not this is going to be ticking higher, lower, steady, the same. They've done a pretty incredible job of we're going to forecast 2.4. Notice that it comes in 2.4. I'm not saying that this is false, but certainly seems to be hard to believe that they're spot on and super accurate. But I guess when you start removing stuff, it's like, hey, remember that energy and food stuff? We don't want to count that with inflation, so let's go and call it core CPI. Remember that shelter stuff? Yeah, let's call it super core. I mean, that's why they keep changing it. But point is, inflation isn't going away. Adding $2.4 trillion to the deficit can't be a good thing. Inflationary, but again, stocks typically rally because of inflation. It is arguably one of the best hedges there is against inflation is just having assets. Assets go up, gold goes up. So it's not a bad thing to be a position in the market. It's just, does the market care enough to be like, hey, inflation is now a story. Hey, higher unemployment is now a story. Hey, tech not hiring is now a story. The market may or may not care. Big crashes we had in the past, we had the market hit all-time highs before the market crashed. Happened in the dot-com bubble, happened in 2007, 2008. We went back to all-time highs before the market actually fell. So we'll see. All right. Stock that you had a slide on yesterday, Pfizer. Cores. Oh yeah, yeah. Core. Yeah, sure. We talked. Yeah, cores. We talked about. So here's an example. Cores. Let's talk about cores because is it safe to say this for? I'll talk ratio spread here. Um, so I'm just going to give you like a little bit of a strategy review. We'll talk about a ratio spread. Are we okay saying that? Hey, look, I know that I can't really position this cores trade in order to get my position below the lows at $6, but I could potentially get my position here around $10. I think that's kind of fair because we had this huge move to the upside that's probably going to fade a little bit. Um, but there's a couple ways I can do this. Let me go to CORZ. Okay, I'll go to CORZ. And I can go, look, I can do something kind of wild here. I can go all the way out to like January 2027, which is way out in the future. But I'll say, look, if cores is still around, CORZ around, I've got an option chain out 563 days. Let me flip my option chain. I can absolutely do a trade like this, a 10 by 8. But unfortunately, I get no credit for it. I can do a 12 by 10. Now I get profit. So here's what I can do. Okay. If I do a ratio spread, the way a ratio spread works is this. Okay, ratio spread. Basically what it is, it's a combination of a bear put spread, which is a bearish debit spread, and a naked put. Okay, so the naked put acts as the line in the sand to own the underlying. Okay, or the naked put is something to manage for, let's say, 100% or 200% or 300% stop loss of credit received. Okay. So my approach is this. I'll move this up in the white space here. So my approach is this on a ratio spread. My approach to a ratio spread is I am willing, I don't need to emphasize willing. I'm willing to own the shares. Okay. So the naked put for me is it's a line in the sand that if it's below that, I'm willing to own the shares. The other side is if you don't want to own the shares, manage the naked put for a stop loss to avoid big loss. And I say big is relative. It's like if I own the shares at $8, I mean, unless I'm going in hundreds and hundreds and hundreds and hundreds of shares, it's not that big of a loss, right? So it sets me back, $800 on 100 shares. Okay, I can manage that loss. But I'll show you this. So let's look at this trade, and I'll tell you exactly where I can kind of position for this. Okay. So if I say, okay, I think this like $11 low is pretty fair. I think we've got like a 10 by 8 or a 12 by 10. What's nice about this, if I do the 12 by 10, I can pull in 85 cents credit. Now I'd like to pull in a bit more. You can see here, it's kind of weird on the bid price on the $12 strike. I could do three. I mean, I could do this. This is not a bad trade. I'm surprised it only pays me 50 cents, and this one somehow pays me $1 and change. Anyway, I'll just say this is the trade. So if I do a 12 by 10, here's the way this trade is constructed. So here's an example. For the January 2027 expiration, so it's out in the future, okay? I buy the $12 put with one contract, and I sell the $10 put with two contracts, right? So if you have a 12, if you buy the $12 put and sell the $10 put, that's a $2 max profit debit spread. And then you have another, which is a sell $10 put. That's a naked put. So the combo is you have the buy 12 put is a +1 because you just buy one contract, and then you sell the 10 and you have -2. So you have the one $10 strike is a part of the debit spread, and the other $10 strike is a part of the naked put. That's how this works. Make sense? Okay, so the way this trade works as far as ownership, if price, so if CORZ is less than 10 by expiration, I'm assigned the 100 shares. Because remember, I have a 12 by 10, which is a debit spread that I can max out for $2 profit. But if it's below $10, I still have one contract that's a naked put. So I'd own the 100 shares. And I get assigned at 10 bucks. Okay. But I have the 12 by 10 debit spread, which offers $2 credit. Okay. And I have the ratio spread credit from the beginning. So the math on this ownership is as follows. Assigned at $10. If price is below $10 by expiration, I'm assigned the shares at $10 minus the $2 debit spread credit and minus the, let's say, $1.35 ratio spread credit, which gives me a break-even price. And this is kind of what's special about the ratio spread, in my opinion, is even though I'm saying I'm willing to own the shares, the nice part is I can own it for pretty cheap. I get assigned at $10 minus the $2 credit on the debit spread, and then minus the $1.35 on the ratio spread. I can own the shares at $6.65. Okay. So if that works out to be my break-even price, I mean, even if I'm assigned at $10, I mean, $6 gets me below April lows. If I own it at 665, this low is 626. I'm only like 30, 40 cents away from owning the shares at like potentially a crash point that the market had this year. So that's how I use a ratio spread, because I'm trying to tell myself, look, I don't want to buy this thing at $16. It's already gone up. I mean, from this April low, this thing's already up 180%. Robinhood's already up 180%. I'm not interested in buying and chasing a stock like that. Okay. What I'm interested in doing instead is, can I find a way to construct a trade where I'm willing to own the shares at a price that I said would be good? I'll own the price here at $6. So I can own it at 665 and then add a covered call and repair it. Or own the shares and say, look, I own it now at $6. Now what does it do? Does it go back up to 17? Does it go back up to 10? Does it go back up to 13? Does it go back up to all-time highs? That's your choice. But if you believe in a stock and you are willing to own shares and own it at a discount, a ratio spread is a great way to do that. And most of the time, I'm never assigned these shares. So when I build a ratio spread out in my Pulver alerts, you will see like I have a probability profit, I have a chance of assignment, and they're usually less than 10%. There's not a lot of times I would put a ratio spread on and say that I have like a 50 to 60% chance of assignment. Most of the time, it's like less than 10% chance of assignment. And that's kind of the reason I take the trade, is because I don't oftentimes get assigned. And so it just becomes an income trade. So for example, in 2025, how many ratio spreads did I do? A ton. When this market was dropping hard in March and April, I did ratio spreads galore, because it was on Apple, and it was on Google, and it was on Tesla, and it was on Meta, and it was on Microsoft, and it was on Netflix, and it was on all like Coinbase, like all these stocks where the price was dropping like crazy. I'm like, well, I would be willing to own the shares at this massive discount. And so I had high volatility, which means high premium to sell. And so I went way out of the money on these ratio spreads. And I gave myself essentially like look, the stock would have to be down 50, 60, 70%, and then I'd own shares. That's how it worked. And I never got assigned a single one. I think actually, I take that back. I got assigned on Tesla. I got assigned on Tesla because Tesla jumped 55% from the post-election highs. So Tesla got assigned, and I took the shares. I added a covered call, and I flipped Tesla for like $7,000 in like 2 weeks. And then I did it again, and I took the assignment and I flipped it for another $9,000 in like 3 weeks. I'm in Tesla now, and I'm still flipping it, and I'm still rolling it, because I look at this point, we stabilized. The bottom at 220 is pretty safe. We ripped up to like 300 plus. I think Tesla is going to be a stock that I can just keep adding some covered calls and premium. And right now, let me do the math on my Tesla positions here. Let me find there it is. So my spreadsheet, let me go to Tesla. Okay, so I have a break even at 260 for a 280 covered call. Okay, I have a break even of 232 for a 260 covered call. So between share wise, I mean, I'm pretty sure there's about $30 a share. So $30 a share on 500. So I've got about $15,000 in Tesla on one chunk of accounts, and then I have some new clients to get added in, and that other one is 260 to 280, another 2 grand, so plus another 2 grand, and then plus another, let's see, 319, 355. It's another $3,500. So if all goes well right now, I'm looking at another about $18,700 on Tesla. If I let my stock get called away, I'm making about $18,700 plus the 16,000 I've already made. So yes, I've owned shares of Tesla, okay, but actively trading some options. And again, it was a ratio spread that kind of started this whole thing for me. But a ratio spread that I was willing to take the shares, own the shares, and repair it with some covered calls. Tesla's made me, it potentially is making me like $34,000 this year. And I've owned, I've owned some shares, but I use that capital to repair it. Make sense? All right. So any questions on that? So I do ratio spreads quite a bit. Again, my intention is that I'm willing to own the shares. Okay, I'm willing to own the shares. All right, let me check on one thing really quickly here. And watch that one for the day. I think we got some levels here to potentially bounce off of. These got the 60, 75, and the 70. Let me see if I can get something around 62. Try something here. Call fly. Try to get a little bit more premium on a put or a call fly really quickly. Come on. All right. Just watching some. I'm just getting some levels to bounce around here on the SPX. All right. So that help on the call fly stuff or the call fly, the ratio spread. So for example, I mean, I'll show you some of the stuff I have in Pulver alerts in the portfolio. I got lots of ratio spreads. I'll try to figure out what I have. So I had a bunch of the Mag 7s. Here's one in Airbnb. Here's a bunch on Amazon. That's a bear call spread. Baba, no. Baidu, just own some shares, some credit spreads on Baidu. Bros, ratio spread on Bros. Yep, so that's Dutch Brothers. Let's see here. Costco, have some ratio spreads on Costco. CrowdStrike, this is a 111, which is kind of a modified version of a ratio spread. And max profits around 408. I'm up about 78% of that right now, so not too bad. Dell, ratio spread on Dell, up around 40% of that max credit. The Dow, just own some shares right now, nothing crazy. Disney, nothing. DJT, nothing. Brazil, China, FCX owns some shares. It's up a decent amount. Naked put combo on. This is copper, Freeport McMoran, up around 63% of that max profit. That's my Euro stocks trade. GLD, that's a ratio spread there. Google, ratio spreads. Like, I mean, I have lots of them. The reason why is because they work. The reason why is because I like them. Now, one more thing before I wrap up on the ratio spread side. Obviously, I've got enough capital in my accounts where it's like I can do a Mag 7 stock that's $200, $300, $400, and I can still allocate the type of capital. I can own Tesla at $250 a share, $300. I don't love doing that, but I can. I can own the SPY. I can own the Qs. I can flip some of those like bigger allocations, and I can repair them. But the other way to manage a ratio spread is if you don't have the capital to manage a ratio spread, you look at the put and you manage the put. So here's an example. SPY's expensive. Let's go to the Russell, a little bit cheaper ETF. Okay. If I went out to the Russell and said, hey, look, I don't think the Russell is going to come back below 170 bucks. So let's see how far out we'd have to go on Russell. It's a cheaper ETF. You know, if you think that the market's going to find a way to have S&P at all-time highs, Nasdaq all-time highs, Dow hitting all-time highs, maybe the Russell playing catch up to get to all-time highs. If you're that bullish, Russell's obviously a cheaper ETF to play. Okay, so if I went on Russell at IWM, let's go out to the end of the year. Okay, and say by the end of the year, end of the quarter, December 31st, the Russell, I'm willing to own the shares at 170. Okay, so if I buy the 175, sell the 170 times 2, I can turn this into an income trade and pull in $1.70. Now, if you're telling me, hey, Chris, I don't want to own the shares of the Russell at 170, I don't have that much cash, I don't want to tie up, $17,000 cash to own the shares. That's fine. Okay, what we can do instead is this put is offering $2.11. Okay, so $2.11 credit. Now, the way to manage that trade is if this turns into 422 or turns into 633, debit or debit. Okay, this would be a 100% stop loss, and this would be a 200% stop loss. That is a good way to manage this. Because if you don't want to own the shares, you don't want the assignment. If this is trading at a $6 debit, the most I can lose is about 400 bucks. That to me is more manageable than being on the hook for getting tied up for 17K in ownership. Does that make sense? So if you don't have the cash to own something, then a 1 to 200% stop loss can oftentimes get you out of the trade with a manageable loss, and you go find another trade. But again, what I like about this trade is right now by December, there's about a 95% chance that this trade is going to be profitable to keep the full 174. Okay. So, and if I have the buying power, I'm not looking at the max loss because I'm going to own the shares and repair the shares. Okay. But that to me is a pretty good income trade. So we've got a probability profit at 95. I've got a delta at 10, which means chance of assignment is around 10%. Probability of profit is around 95%. And if I did own the shares, then the math works this way. I would own the shares with an assignment at 170, which means price has to be below 170, minus 5 on the debit spread, minus the 174. I'd own the Russell at 163.26. 163.26. So from current price, 163.26, the Russell would have to drop around 24% from current price. Like, we're talking, there's some pretty serious problems that the Russell's going to drop 23%, 24% by the end of the year, right? We're not in a bull market if that's the case. So is that a good trade? I mean, could be. The question is if I'm willing to own the shares, I got to be willing to say, hey, look, I'm going to own shares in here and make sure that that's support. I've also got to be willing to look left on the chart and say, well, this is a COVID crash. Does this market come all the way back down to 100 bucks? If it is, can I use covered calls and lower the cost basis? It's like, I can lower the cost basis. If I own shares at $164, I could lower the cost basis down to 140, 130, 120. It'd take time, but I could lower the cost basis over time. So point is, like, if this is where the market's going to get to, if we go low to high, pull back, higher high, that ratio spread pays me 175 bucks with a pretty high probability of profit. Okay. And that's how I do it. Because if I own the shares, I'd own it at 163. I'd add covered calls. I'd repair it. I'd try to make 500 to 1,000 bucks, and I get rid of it. You know, I'm not looking to get tied up in these stocks and own them forever. I'm looking to flip it for income and do it again. Make sense? All right. So that's some ratio spread stuff for fun. Somebody's been asking about currencies. I'm just going to take a spot check on currencies. Today we got some risk off tone, Japanese yen on top, Swiss on top, dollar catching a bit of a bid off the bottom. So dollar was the weakest currency going into the morning at 6 a.m. Eastern time. And now the dollar is catching up. Swiss has been sideways. Yen has been stronger. We've seen a lot of this. We've seen some markets where like the currencies are showing risk off trading, but yet the equities market is still like sitting at highs or maybe even going up for the day. It's a mix. I still think I'll go back to my original thoughts this morning. Dollar index, be careful on the sell side of the dollar. I would not be surprised to see the dollar catch a bid. Okay, TLT is up to 87. I actually need to sell some calls on TLT. It's a diagonal spread trade. I need to sell some calls. I want to get rid of my TLT. I might sell one out for like maybe this Thursday, maybe Monday, because of those expirations I can choose, but I might do like an 88 or 88.50 or 89 call and just let it get called away. Trying to pull in maybe an extra 30, 40, 50 cents. I got 3,200 contracts or 3,200 shares rather. So 3,200 times, let's say 40 cents. I mean, I could add about 1,280 to my bottom line, which gives me about $13,000 or $14,000 in TLT if I get it called away. I don't mind it getting called away. Okay. The reason why is like, I don't want TLT as a big position in my portfolio. It's really not a huge position, but it's an allocation. I'm like, let me get rid of it. Profit, yes. Holding longer, no. I don't want to hold on to it that much longer. Okay. So anyway, that's where I'm at. Okay, I'll put a pin in that for tomorrow. We'll talk some more like top-down macro currencies. We'll kind of do across the board. Sorry, I got a little tangent there for some ratio spreads, but I walked you through it. That way, when you see some ratio spreads pop up in the Pulver alerts, you'll get it. You'll make some sense of it. And like I said, I'm willing to own a lot of the shares. I say that in the alerts. If you're not willing to own the shares, consider that like 100 to 200% stop loss. That way, you can manage the trade, get out of the trade, and still save your skin, survive the trade another day. It's not a big loss. Anytime you're doing like undefined risk, you got to make sure there's something there to protect yourself. Okay. All right. I'll let you go for today and come back and do it tomorrow. All right. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.